Okay, good afternoon, ladies and gents. Hope you're all well. So let's check out these markets, and of course, quite a big sell-off already this morning, purely off the back of Bank of America, well, and I guess to a certain extent General Electric. They're the two earnings reports we've already had this morning. General Electric, slightly better on the earnings per share side, 22 cents. We were expecting 20 cents. Revenue was worse though, came in at 37.8 billion. We were expecting just under 40 billion. So the revenue side disappointing, and it's the revenue numbers that we want to see increasing to really give us confidence going forwards about economic recovery. So slightly overall disappointing from General Electric, and then very disappointing from Bank of America. Their EPS much worse, came in at a loss of 26 cents. We'd been expecting a loss of 12 cents. Their revenue was worse, 26 billion versus expected 27.7. Okay, so Bank of America, really bad numbers there. Slight positive, Halliburton beat expectations both on earnings per share and on revenue side, but of course they're a much smaller company, so not as significant. So the two heavyweight earnings reports we've had today, and actually concludes the earnings reports for the week, have been disappointing. Well, General Electric slightly disappointing, Bank of America very disappointing. So we've already come off quite a substantial amount. We were trading around about 10.92 before the General Electric numbers, and as you can see, we're now down around the 10.85 area. Let's just talk about yesterday first and foremost. Quite an interesting day. The pattern of the shape of the market action was similar to the day before, in that we had earnings reports prior to the opening bell which were better than expected, and yet the market sold off quite heavily. And the reasons yesterday, we had Goldman Sachs report their earnings, which were much better than expected. Their earnings per share was $5.25. The problem was the market whisper had been an earnings per share for $6. Okay, so the actual facts didn't quite match up to the rumours, and of course the market prices in the rumoured figure, and so even though Goldman Sachs beat forecasts, the initial reaction was one of slight disappointment, because it wasn't quite as a stellar performance as the rumours had suggested it might be. Okay, that's why we kind of sold off. Citigroup yesterday also were marginally better than expected, only very slightly. They had a loss of 27 cents versus 29 expected, and their revenue was very slightly better than expected. That's why we sold off. And also, we had JP Morgan the day before, which were fantastic results, which boosted the whole of the financial sector. Okay, the whole of the sector was up 3% on Wednesday. So then for further financials reporting again on Thursday, it's difficult to get further upside, having had a 3% up day the day before. And the fact that they weren't absolutely blockbuster results from Goldman Sachs, don't get me wrong, they were fantastic numbers, but the rumours had suggested slightly better. That's why the initial reaction was one in a downwards direction. We moved lower to hit a low down at 10.80.50, just ahead of the 130 data, and it was the 130 data that really turned the corner, and we had much better than expected manufacturing numbers. In particular, they were the standout economic data release yesterday. The jobless numbers were also better. Okay, so actually, following, by the cash open, we'd had nothing but good news. Okay, the Goldman's numbers were really good. The Citi numbers were slightly better than expected. All the economic data was better than expected. So the justification for the market trading down at around 10.80 was hard to explain, and the market began to rally. It wasn't plain sailing, because the data at 3 o'clock was actually slightly disappointing. The Philly Fed numbers the headline number was worse than expected, which brought another wave of downwards pressure. But some of the components of that fully fed number were better than expected, particularly the new orders and the employment side. So the sell-off didn't quite get down to the lows of the day that had been set prior to the 1:30 data. And really from there it was just a question of, okay, we've had all the earnings, we've had all the data, and actually, largely speaking, they're all better than expected. And couple that with a incredibly bullish oil inventories data at 4 o'clock, this paved the way for a very slow trending move back towards the highs. And it did take a long time, but eventually we managed to surge through the high. This was basically because of the oil price spiking. It nearly got to, let me just get the right figure for you here. We nearly got to $78. Yesterday's high was $77.98. We did creep above 78 this morning. So oil had a huge up move, which led to the oil sector's stocks really outperforming, and this pushed us higher. And the Dow had a powerful move back above 10,000. Which all added to an injection in volume that finally gave us the momentum required to get us above the previous high of the day, which was at 1090. And then after the bell, just to confirm the justification for that up move, we had great numbers out of Google. Their earnings per share 589. We'd been expecting 492. Their revenue 4.38 billion, they'd been expecting just over 4, so really good numbers. But again, actually there, the rumour had been for something even better. They would rumoured $6 for earnings per share, so not quite as good as the rumour, but still fantastic numbers. IBM also reported they beat forecasts, $2.4 earnings per share versus just over $2 we'd been expecting. The revenue was slightly better, 23.6 billion. They'd actually upgraded their 2009 overall earnings per share to $9.85. They previously had $9.70. So good numbers out of IBM as well. That justified the late surge yesterday. The market spiked to 1093.25 on those data releases just after the bell. And then this morning we've had another move higher, and now the high of, the new 12-month high is 1095.50, in well within sight of that 1100 psychological level. However, whether or not we're going to get there now is probably unlikely, given the fact we've had some bad earnings this morning, as I've already spoken about, with General Electric and particularly Bank of America not producing the numbers we wanted. So we still have a couple of very important economic data releases: 2:15 industrial production, and 2:55 we've got the University of Michigan consumer confidence numbers. So a couple of important economic data releases, just one before and then one after the cash open, to really kind of finish the week. We've had all the earnings now this week, so all that's off the table. It's just these economic data releases. Overall, you've got to think about overall how have we got on, earnings wise this week, and it's been definitely better than expected. Bank of America, the standout disappointment, but apart from that, largely speaking, we've got the numbers that we kind of wanted. So in terms of direction from this point here, if we can get some good economic data, I think we can climb back towards the 1090 level that presented a pretty good resistance level on Tuesday and Wednesday and Thursday. I think that's a level we need to look out for. It's also a fib level here. I'm using a Fibonacci series, just using yesterday's low and this morning's high. So that fib level, the 38.2 fib level, coincides with that 1090 resistance. Pivot today also coincides with the 50% fib level, to add strength to that. It's around about 1088, so that's a pretty good level for us to look out for. If we get bad data, we can certainly get down to yesterday's lows, I would say, just above 1080. So that's the kind of range we're looking at, 1080 to sort of 1090, depending on the data releases at 2:15 and at 2:55. So disappointing start today, guys, but overall on the week, it's been a good week, and let's see if we can finish it off with some good bits of data to get us back up to the sort of 1090 area. Okay, have a good day.